The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Rich Anderson on as our guest at 9:30 to talk to us about the grains. We're still trying to catch a bottom down in here, possibly. We're looking for it in corn. We're down to within about 3 cents in corn. We haven't quite hit there yet. It bounced a little bit overnight, but Rich will be on to talk to us about it. The interesting thing is that we had Norm Winsky on the show yesterday from Astro Trend, and he pointed out that the November soybean had really strong support right around 10.20, and that was spot on the low overnight. Now, they haven't taken it out yet, but at least during this time, it's held up pretty well. Wheat's done a little bit better. It's bounced a little bit more. We're going to cover the stocks and also the bonds and stuff here in just a minute, and also the metals, but we'll start with the metals. I posted the chart for crude oil, which we're going to start with this morning. As you notice, we've been watching crude oil. We just made a 2-month low in crude. That makes we've almost made we did make a perfect equal low. We made a 1.27 expansion, came in at the 1.27 level at 45.15. The low was 45.10. So we'll see what's happening. We're having some really wild volatility this morning, folks, as you could probably imagine, with this jobs report that came out just a little bit better than last month. I mean, they're such a joke. I mean, the people that do these numbers must be the people that write the political rhetoric, because, I mean, they just don't have any idea how to do numbers. I mean, how can it be 35,000 one month and 285,000 another month? Give me a break. I mean, even a 3-year-old can figure out something's not right with that. Like yesterday with that with listening to I listened to the FBI probe a little bit, and oh my gosh, I actually felt sorry for that FBI director. I mean, he couldn't even tell an honest lie. But anyway, that's neither here nor there. Okay. Let's see. The last couple of days, you remember that Shane has been talking to us about 10:30 in the morning. Both Wednesday and Thursday were both perfect days. Wednesday was a buy, Thursday was a top. That's when the Federal Reserve came in on both of those. So we want to pay attention to that. That's after the first hour of trading, which is what they call the rookie trading. When you're on the floor of the trade, that's when most people come in and put their orders in. It's best to do it, after the market settles down, but that's neither here nor there. So anyway, as long as we stay above 44.75 in the crude oil, it's got a chance here for a rally. Remember, we've come down very, very modestly over 2 months. We haven't backed off more than 10%, which is a pretty mild correction in 10%, considering we went from $26 a barrel to $51 a barrel. Duffy, thank you so much. I couldn't remember what it was. It's called Amateur Hour. Okay. Anyway, the swings that we're seeing this morning, folks, silver has moved $5,000 already in the first 20 minutes. We were down 80 cents, up 80 cents. Gold moved around quite a bit. Now, gold backed off a little more. The harmonic number in gold is $34. And if you subtract that from the high, that would have taken you down to about 41. We hit a 34, I believe, really quick on a fast tick, but you couldn't have been in that trade unless you had your absolute order, setting there, waiting for it. We're having very good volatility in Treasury bonds also. I mean, they have dropped 2 points from the overnight level, actually a little more than 2 points, and have now rallied back almost 2 points back to the old high. So there's really wild things happening all across the board. Even the currencies, in the last 20 minutes, the euro has rallied 80 pips after hitting a 1.27, 61% retracement level that was pretty much spot on. So we're really getting a great deal of volatility. The only market that is not being volatile right now is the crude oil market. So that's going to be an interesting thing to look at. I think today's close is going to be very important for one market for sure, and that's the precious metals, because if we close lower today, anywhere near where we are trading right now, the gold's got to get a little bit lower because it's still up about $8 on the week, but silver is basically down on the week now, and that would leave a tremendous shooting star candle. It'll be one of the biggest we've ever seen in silver if that happens. So we'll watch that very closely, because that would really be an indication that a major correction is now coming to the silver market. And I think that is nothing more than a correction in a bull market. That's what I think it is. But that's just, here again, that's my opinion. The other thing I wanted to mention is the fact that we have been watching the bonds, of course, and the German bond and things like that. And I wanted to show you that the German bond is still acting incredibly poor versus our 30-year bond. In other words, they're really making it. Hold on one second. They're making it really hard to see this divergence unless you're looking for it. And we have not made new highs from 2 weeks ago, and yet we made new highs in Treasury bonds again last night. Then we broke 2 full points, and now we're going back, over the same area. So it's going to be real interesting today, no matter what, because the swings that we've seen this week have been nothing short of phenomenal, and I believe it's going to be the start of a summertime volatility that the folks have not been exposed to very much. So we will watch that, very, very closely. We also know, let me just show you this bond chart, because this is a daily bond chart that was done yesterday. And again, last night, give me 1 second here, and we'll put this up here. Last night, we went up, and we did take out that old high from yesterday by 2 ticks, and then we broke 2 full points after the report. And of course, right after the report, the market, the shorts are absolutely scared to death, and the market has rallied back all the way to the 78% retracement of that whole move down. We've rallied almost 1 3/4 points. So that's $1,500. So we were down $2,000, up $1,500. In the last 5 hours, Treasury bonds swung $3,500, and that's a big market, folks. That thing is many, many times bigger than the S&P, and the currencies are even bigger than that, and they're having really wild swings too. We've had we've had a 180 pip move in the euro in the past hour. I mean, it's just these moves are just tremendous to look at. Now, the number that I think is going to be key today in the S&P, if you'll check your charts, I've tried to post it, but I've lost it as I usually do. But we have a really, really monster number up here, folks, at 2114. 2114 is the 1.27 expansion from July 3rd, and it's a 1.618 expansion from July 7th. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we'll have Rich Anderson on here at the break here in about another 10 minutes. But we want to continue on with some of the things that we're watching. We've already talked about crude oil. Folks, we've had a $7,000 move in gold here just in the past 15 minutes. So this is one of these days where you better buckle your seatbelt. Well, it's been a half an hour, not 15 minutes, but we've rallied back to above the 78% retracement of the whole move down, because we went from 1378 down to 1337, and then we rallied all the way up to 1372. Now, a lot of that is the crazies, the amateur hour, whatever you want to call it, because you get such wild swings. But if we close strong in gold and silver, this is not going to be a weekly reversal. This was just another buying opportunity, because every time it's backed off, anywhere near $34 in gold, it's been a buy over the past several weeks, and that could continue on for some more time if it makes another new high today, or even closes up anywhere near where it is during this level. Something must be happening that is very, very important, because you're not going to get all of this action in these commodities like we're having in golds and silver and stuff, and the treasury bonds and stocks all going together. That usually doesn't happen, but we live in unusual times, as they say in the Chinese curse. So we'll watch out. But just look at what we've done here, and this is not even. I'm going to just show you the chart from Sunday night here in silver, because this is just really mind-boggling. I know Rich will tell us that the brokerage firms are now increasing their margins on everything, and also in limiting the orders that you can put in at certain times too. But this is where we were Sunday, and also July 4th on Monday. Well, to this morning's low, we got down to 1910. You'll see it at the lower part of that bottom because we'd had a rally from 1980 up to 2060, and then we had another ABCD down to that 1920 level, with 1910 being the low. But that happens during a report, and if you don't have your order sitting in there like Mr. Z did today, very astutely in gold, picking up a quick $30 an ounce, you're going to flat out miss it. So pay attention to what Mr. Z is doing, because he's watching the swings and the numbers, very, very astutely, and it's always important to keep. But a lot of guys in there. Duffy does it, and some other guys too, but I can't follow it all the time. But Mr. Z, I know him personally, and he knows his stuff. So pay attention to that. Okay, now we had another question about the corn. Corn has still got a chance, folks. I will put it up here again. This is the corn from Monday. And I just wanted to bring this to your attention. I haven't had a chance to update it yet because I wanted to show you. Now, we've been down to 346 in the corn. The ABCD on this and the 1.27 expansion comes in at 343 on the December corn. Now, we've made new seasonal lows for sure. And the key to this chart was when we made the 135, higher bottoms, which was the Roy Longstreet pattern. Then we rallied over 3 days to the perfect 38% retracement, and then the market just gave up the ghost and broke really hard. Those are some of the best trades you can look for, folks, is when the market can only do a 382 retracement and then explodes, because that tells you that the thrust of the market is extremely powerful, and you don't want to stand in front of it. So we'll keep watching this corn for a potential bottom. It has rallied a little bit overnight, just 4 or 5 cents, but in corn that's quite a bit because it's such a large market that we're dealing with. It's nothing that we can't put your finger on. So that's the main thing to keep in mind here with the corn. As far as the currencies, we have the U.S. dollar now with the jobs report coming out at some unfathomable number makes the U.S. dollar weak, and so we've had a 200-point move in the euro in the past hour before the report and then after the report, and then the market went right back up again. It stopped right at a 61% retracement on the bottom and a 1.27 expansion at that time, and it tells us that it's still got a pretty good chance, for a little bit better of a rally, because what we've done here is we've tested this bottom here that we've shown you several times. Again, we just did it again this morning, and we tested it down there at that 110 and change level, and we've had a tremendous move so far coming out. These moves are equivalent to 20 to 25 points in the S&P when you look at it on the dollar profit or dollar risk that you're watching with these things. So this is what we're looking at. We're coming into the opening now. We sold off just a tiny bit in stocks, about 4 points in the S&P, but we're having tremendous swings here. Just in the euro, just as we were talking, the market had gone up from 109 and 110 basically, went up 110, went to 111.20. That's equivalent to $1,500, and then it has dropped $500 during the time that I've just been talking about the euro. So if you're not familiar with euro trading, you shouldn't be in there. And many of the firms are preventing you from entering because they've increased their margins by 400%, and that's to protect you. Well, the first line of protection, of course, is themselves, and then you after that. They prefer not to do the business if the risk is too great. I can promise you that. They're interested in doing it, but they're not going to do it if the risk is too great. This is what happened to us in 1987 during October 19th and 20th. The firms just quit doing business, and then fortunately, with the plunge protection team came in and brought order to the markets, much like what the Federal Reserve does now. So we'll see what's happening. Okay, let's take a look here. Someone's asked a question: where would I buy gold today if I had to? Well, the best place to buy it was when it made that low down there at 1338 was the low. 1342 was your number to buy if you were buying a retracement number. That was a spot on ABCD number, and then we rallied up to the 786. So if you took the range that we've made so far in gold, which has not been a small range. I mean, this used to be a monthly range, but we've rallied almost $40. We went from 37. We rallied $34. Wow, what a surprise! $34. We went from 1337. You add 34 to that. That takes you to 1371, and that was the high so far today. So it made a harmonic number on that rally. And that means on the pullback, you want to watch two numbers very, very closely if you're following it and you want to buy it. The 382 number comes in at 1358. Okay, and if we don't hold 1358, the next number is 1350, which would be the 61% retracement. But those are just numbers that you want to keep in mind if you're interested, in buying the gold. I'm going to wait until Monday to see what happens, because we have a lot of things going on with volatility, which is really mind-boggling here. The only positions that I have on right now, I'm fortunate enough I was able to sell the bonds up near the high, and they broke about 2 points, but wheat's been very good to us, and so those are the only ones that we've done. I didn't do anything in crude oil. People have asked me that question, and the reason why is I was not in front of the machine when it was happening, and I didn't have an order sitting there. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and we have our good friend Rich Anderson from Anderson Capital Management on the line. Rich, are you there?
Yep. Good morning, Larry. How are you?
I'm good. Rich, I have a question for you. Do you put a seatbelt on your Aeron chair while you're trading these days, given these swings that we're having?
I'll tell you what. It's a good thing I was sleeping during the Asian market Sunday night when that silver was flying around. Holy buckets! And you had it first. You talked about it that morning, and Bloomberg talked about it a day later.
Well, I was watching it Sunday night because I hadn't seen anything like that in a long time when we have a $23,000 move, in silver. And, it's still probably not over, given the volatility that we're having. But, it's really amazing. Just looking at the euro this morning, which is the best thing in the world to trade and by far the most liquid. I mean, it's had a 250-point swing in the last hour and 20 minutes.
And silver's come back, and gold.
Yep.
I mean,
Well,
it leaves you speechless, doesn't it?
Yeah, tell us about from the brokerage end, because I know you're closely related to the folks at R.J. O'Brien. I mean, I noticed that most of the firms are increasing their margins on foreign currency by anywhere from 200 to 400%, and we're seeing some of that in silver and gold, aren't we? They've increased
Right. Well,
margins.
the exchanges before Brexit is when the exchanges started to raise margins. And individual firms then can charge anything. They can charge anything above what the exchange, but they can't charge less than exchange, basically. And look what happened with the Swiss franc traders when this. I mean, things are in flux, Larry. It's hard to say.
It really is. There's something out there that someone's afraid of, in my opinion, just looking at it from the brokerage standpoint, because these folks are there to make money. And when they put restrictions on folks, that's because they're afraid not only for themselves, but for their customers. At least that's what I was taught. And I knew, Les Rosenthal and a few of the other guys that were there, Waldock and Barry Lind. I mean, I knew all those guys, and they were more concerned about their customers, than they were making money. It was really hard to believe, but that was the truth. But the swings that I'm seeing are, and you can't follow all the markets, Rich. I mean, you got to pick one. You got to pick either bonds or gold or stocks or euro, because you can't trade them all because they're all moving so fast.
Yeah, if you follow more than 3 or 4 markets, I think you got a problem. But part of that fluctuation in Asia is the open interest had gone down significantly in the silver market. And I don't know what the exchanges are there because I don't trade there, but maybe that's why the open interest had gone down. So the boys have just decided, well, it's just a playground. But the way some of these markets are swinging around, it's more like the casino table than you would really want to believe, unfortunately.
Yeah, this has been, well, it's hit some really nice numbers that we've looked at, as far as, the patterns and stuff, but the volatility is what, and, I've been doing this for a long time, as have you, and when it surprises me, I can imagine what the neophyte must be thinking about when he looks at some of these things to watch it. So the main message here is for everybody to be careful. Isn't that about it?
And try and control your risk the best you can, and that's why a lot of your big traders tend not to, to carry heavy positions over the weekend, because they can't. The weekends, some of the markets are closed. They can't control their risk as well as they would like.
And you don't see gaps on the charts anymore, so you can literally get back in sometime if you want to. So that's usually not a problem either, I guess.
You're right. Well, that's a plus side. Yeah.
Okay, we got a question here about the corn market. I talked to the folks a little bit today that we're in new low ground seasonally, but we've got this big number around 340 a bushel. In corn. That's a big number. Can you tell us what you're seeing in corn? And when we're finished with that, we'll move on to beans and then also wheat. Let's do corn first.
Okay. First of all, on the corn, you follow the money, and the funds were major longs, and the market broke down when we had the weather changed, and we had closed at 348.5, and then we started it down, and then the funds have to get pushed out. There was a crop report that showed that the acreage that they had the traders had generally expected to be reduced hadn't been reduced, and the market continued to sell off, and more funds, and money got out. But now then, yesterday we had CONAB, which is a Brazilian, like our USDA, changing their estimates on their corn crop for both their first corn crop and their second corn crop, because they have two times a year when they harvest corn, and they reduced those as much or more than what our acreage on corn was higher than expected on the June report. The problem still remains. There's wheat everywhere place in the world, and wheat is so much cheaper to feed than corn in the Southwest. It's 60 to 90 under. I haven't looked at the basis lately, but that's what it was. And corn's 30, 40 over. So wheat's cheaper than corn. So any new pen of cattle I'm putting in the Southwest, I'm going to feed it wheat, and that hurts the demand side of corn. And it's been dang near perfect weather. I mean, it rains, showers, and it's not hot.
The old greenhouse effect, that's for sure.
And corn is a July crop, and so if you don't have a problem by July, you're going to have to wait for a freeze scare, and that's a long ways off. The one that could still be influenced is the beans, because the beans are an August crop, and a change in the weather forecast could light it up.
Okay, now beans hit some pretty stiff resistance up there at 1160, and then we've broken, well over $1.50 a bushel. Are we down in an area where it's looking interesting here around the 10.20 a bushel level? I
think, I thought between 1020, 1005, and 970 were the three numbers I was watching. But I like the fact we're trying a little reversal here today, but I'm still opening, I would still look for, maybe the 1020 is the magic number. I had some numbers underneath that I thought might hold. So I'll be in there for short term, but I've got to have the right kind of a setup and trigger in order to stay in there overnight, and particularly over the weekend.
Okay, we've got a question from one of our listeners around talking about cattle, particularly October and D's cattle. What are you seeing in here? Are we getting near a bottom? Because you mentioned the 108 level the last time you were on a week or so ago, and
right.
We're testing that now, aren't we?
Well, the nearby got down to the front. The August got down to 109.57 on June 20th. Rallied, then it sold off into the 110s. Rallied again, sold off into the 110s, and we're 112.50. Here's the problem we've got. We've got a cash market that's many dollars over the front month futures. A normal basis for October cattle at this time of the year is to be a couple bucks over cash. And we're $8, $10, $12 under cash. So something's broken, and I'm not sure what that something was. I mean, like I talked to a trader in Chicago 2 days ago, and he said, and we talked about how the basis, they should be over cash and they're under, and he said they're $10 under, so what do? They sell off $2, now we're $12 under. I mean, nobody seems to know what's going on.
Stay with us, buddy. We'll be right back, okay?
You bet.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back with Rich Anderson from Anderson Capital Management. And Rich, could you expand a little bit on why the cash market is, playing such wicked tricks with the futures market? We've had a question from Mr. Z in the room who follows cattle quite well, and he's one of the better cattle traders that I've met. And he hadn't seen anything like this in a while. So can you expand on it, or is there anything to expand upon?
Well, I mean, nearby cattle are paying a whole lot more for than what the board is. But, they're paying like 120, 119, 118. Mm-hmm. It's usually Friday before they establish a cash market. Apparently, they think that they're worried about the economy. I mean, the jobs number today came out pretty decent, but they revised down the bad number from a month ago from 30-some thousand down to 11,000. That doesn't exactly generate optimism, even though today's number was very good. But they're worried about what's in the front in the economy, and these cash markets in a week can move $4, $5, $6. Mm-hmm. So nobody's willing to step out there and build a position, and all the big position builders are kind of on the sidelines. They're scratching their heads too.
Rich, since we've been on the air, I've just posted a chart in for the euro, looking at it on a 15-minute basis. And the euro, people that don't trade foreign currencies, it is $1 trillion market, folks. It's not $1 billion market. It's $1 trillion market. They trade just about $1 trillion every day in the euro U.S. dollar itself. And so far today, we've had over a $3,000 move here in the last hour and 15 minutes. I mean, you can see from this chart that we rallied up to exactly the 0.618 retracement, took out the high of the overnight level by 1 pip, and immediately has dropped another almost 80 pips, which is near $1,000, well, $900 in just a matter of a half an hour. So these swings they're just, when they scare me, Rich, and I'm fearless, they're really amazing what's happening.
I'm assuming that the fundamental reason that the euro moved so much was the jobs number came out, and that certainly had moved bonds, and it moved the euro, and it looks to me, talking about big markets, that we've got $10-11 trillion in negative interest rates right now, and the knock against gold has always been that you can't earn any interest on it. You have to pay interest. Well, when you've got negative interest rates of that amount of money, you're better off owning gold than having it in any
Yeah.
negative interest. So gold is becoming more and more of a de facto currency. That's why you see the silver. I know you've looked at silver versus gold and how silver's lagged from time to time. Well, I believe that's the reason why. The people going into gold are thinking of it as a de facto currency, not necessarily because they believe we're going on the gold standard, just because it's a better place to put your money than under the mattress or in a bank that's going to charge you a negative interest rate.
Yeah.
And you've got these sovereign wealth funds buying it, and you've got the Asians, the Chinese, and the Indians on every dip. They're buying it. So, I'm not a gold bug personally myself, but, you see a strong trend and you have to acknowledge it. And with zero interest rates, and they could be based on what the big thinkers say on the talk, on the talking heads on the television, they could be with us for a very long time. I think that will continue to track over the next 6 months to a year, more and more players.
Rich, you and I have been friends for more than 40 years, and that's going back when bonds were trading at 56, not at 170. But
I know.
I mean, did you ever in your wild imagination think we would have negative interest rates in certain parts of the world, like, in Spain and other places where they couldn't even get credit just a few years ago, and now they can, it's negative interest rates over there and some of these things. It's just amazing.
I can't comprehend it.
Yeah.
It's the scary. There are two statements. One I heard yesterday on Bloomberg, and that was that banks are becoming more of a utility. That was kind of a scary statement. And then today on CNBC, they said the reason they invented economists is to make astrologers look good.
That must have been
I heard that
Norm
today on
Winsky.
CNBC. I swear.
Yeah. Well, I'll tell you what, you can't knock it. I mean, gee, we had Shane Smolian on this week, and he hit the absolute low and high on Tuesday and Wednesday in the S&P, and then we had Norm Winsky on, who also had some really cool numbers. He hit the beans right on the bottom, and he had crude oil right on the top, and so there must be something to that. And in fact, I've known Norm for a very, very long time, not as long as you, of course, but he actually bought Evangeline Adams's library, the astrology library, and she was the private astrologer of J.P. Morgan. So he knows what he's doing, but it's like everything else, it's only probabilities, and you've got to protect yourself with risk. But we certainly live in interesting times. I don't think there's any question about that.
Oh, no kidding, absolutely. But the other one is that Harry Truman would only have one-armed economists because he didn't want them to say on the other hand.
Oh, I got to use that one. That's like you're the tallest man in a land of midgets. I like that. Yeah. The sound of one hand clapping. You have to admire Harry. He wouldn't even allow the Secret Service to take care of him. Were you aware of that?
Yeah, no, I mean, he was definite Midwestern values. You got to respect. I've been to Independence, Missouri. I've seen his presidential museum.
Wasn't his nickname was Give Him Hell Harry, wasn't it?
Yep. The buck stops here.
We need somebody like that again, my friend. Harry, where are you when we need you?
Well, maybe we also need somebody over in England like that, or like Margaret Thatcher. And I'm hopeful that this Theresa May, I don't know much about her, but she's been the Home Secretary, and that's a tough place to hang out. And she's been there for about 6 years. Before that, it was a revolving door. About every year they're getting a new one. So, maybe she'll be the new Margaret Thatcher and be able to negotiate some pretty good deal. I mean, right now you've got the EU, trying to hang on, and they're going to try and fine Portugal and Spain for their budget anomalies. They've got some real issues besides England. They're going to have to restructure that whole thing, near as I can tell.
Well, we're going to have some turmoil from now till the end of the year, it looks like, and it's going to be, witnessed in the volatility that we're seeing. Because I frankly, you and I both trade pretty actively, and even you and I, when we see stuff like this, it just gets tiring, because we're seeing moves that happen in an hour that used to take a week, and so it's going to be very, very important to watch, I think, over the period of time. Listen, I know you got to get running, but I
All
wanted to
right.
thank you for coming on. We'll have you on in another week or so. Okay, Rich?
All right. Had fun. You had trade well.
Okay, buddy. Thanks a lot.
Bye-bye.
Rich Anderson of Anderson Capital Management, always giving us some good information. And again, he's saying to be really careful in here because the firms are increasing their margins to protect you and also to protect themselves. Remember, folks, in the order of preference, it's the exchange protects itself first, then it's the exchange members, and then it's us. So keep that in mind when they do that. But most of these folks have been around a long time and are very good businessmen, and they do think very actively of your best interest because that's how they make their money. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, as a programming note, I'm going to be doing the Tom O'Brien show this afternoon between 3 and 5. We're going to have Shane Smolian from wolftrader.net as our guest at 3:30. He's going to review some of the things he talked about earlier in the week. And also, what I want to mention is the last chart that I've posted into Tiger TV is the E-mini S&P, because I know that everyone has an infatuation with that. And in fact, that's probably one of the better things to trade today, because it's the only one that is absolutely what I would consider normal. Everything else is in outlier events. It's just really amazing the swings we've had in bonds and euro and gold and silver. Crude oil hasn't moved very much either. That's another one that's very, very quiet. But watch this number at 2114 in the S&P. That is there are three numbers up there that are very important. You have two ABCD patterns. You have a 1.27 expansion, of course, that's reciprocal of 1.618. And we also have the 1.618 number of this last swing that we had off of July 4th. And then also keep in mind that 10:30, that's in a half an hour, little 35 minutes, that we'll be looking at that time frame when the Fed comes in that Shane Smolian to talk to us about. So that's been right on Wednesday and Thursday of this week. Maybe it works on Friday, I don't know. But if the market's up there at 2014 at that 10:30, you might want to take a quick look at that to see if it fits within your risk-reward parameters, and you'd have something to look at. Regarding the metals, today's very important, because if we close below 1350 in the gold and we close below 1970 in the silver, that's going to be a weekly reversal. And in the silver market, it's going to be a monster weekly reversal, because our high on the 3rd on Sunday came in at 2140, and that was a very thin market up there, of course, but there was a lot of trading, and that was due, to what happened in Shanghai. But we've given better than $2.5 ounce retracement. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.